Hello and welcome. My name is Russ Morrow, and it's my pleasure to act as host for this week's virtual summit brought to you by NAPW. I'd like to extend a special welcome to the many NAPW members joining us today. But for those of you who may not be familiar, NAPW is an online and face-to-face community made up of over 850,000 professional women who join together to cultivate valuable business connections, to develop professionally, and to promote themselves and their businesses. If you'd like to learn more about NAPW and the many benefits that membership brings, please make sure to visit our website at napw.com. This afternoon's financial webinar, the Tax Talk Before Tax Time, is part of our 3-day virtual summit for entrepreneurs where, over the course of 12 interactive sessions, we will offer some amazing information and guidance from experts who will provide insights on how to plan, how to launch, how to run, and how to expand your business. Topics covered include how to get started, how to market your business, understanding legal issues, and the benefits of using virtual professionals. Before I introduce our guest speaker, a few housekeeping points. You'll be pleased to know that everybody is on mute, so don't worry about being overheard if you sneeze or cough. Questions, and we know that there will be many, particularly on this topic. Throughout the session, you'll be able to submit written questions, and there will be some time to answer these at the end of the presentation. Depending on the number of questions, we may not get through all of them, but if that happens, we'll do our best to answer them via blog post and by email, but be sure we'll find a way to communicate the answers to you. And the million-dollar question, will I be able to see the presentation again if I miss something? Yes, you will. Recording of this webinar and all the others over the course of the virtual summit this week will be available to view again here on the BrightTalk platform. And this session will be emailed to you. So it's my pleasure to introduce our guest speaker. Brian Walls leads the Walls Financial Group and has decades of experience in financial planning and investment management. Prior to launching Walls Financial Group, Brian was Senior Financial Planner with the ACO Company, part of Goldman Sachs, where he provided comprehensive financial counseling to high net worth senior executives of major corporations. Before this, Brian was Senior Portfolio Administrator at the Money Growth Institute and worked as an examiner within the Special Investigations Division of the National Association of Securities Dealers, the private sector regulatory body of the U.S. securities industry. Now, as we're all just too aware, we are approaching the end of the year and it's time to prepare for those inevitable tax submissions. So during this session, Brian will be delivering some key points and tips to help you feel at ease about tax and financial terminology, and he'll discuss strategies to help make the annual tax exercise more efficient in the future. Brian, welcome. Thank you so much for joining us today. Over to you.
Great. Thank you, Russ, and welcome, everyone. My name is Brian Walls, and I am the founder, as he said, of Walls Financial Group, a boutique financial concierge company in New York City. You might wonder what a financial concierge is, and basically, if it has anything to do with your money, it has to do with our business. So I work with mainly a lot of creative individuals, and it's kind of fascinating to watch how taxes and the bookkeeping aspect of your business can really dominate and take over somebody's life. And it's kind of interesting watching my clients when they come to us and they basically turn everything over to us, how you watch how they are able to focus on what it is that they do on a day-to-day basis and grow their business and make, obviously, more money. So one segment of my business is tax preparation, and I work with a lot of people like yourselves. And, you know, the questions come up all the time. So I thought that today would be a great day to discuss some of these issues and some of the topics that I see on a daily basis. Clients come to me typically start as tax clients. So they come in, they're working for someone else, and they're a tax client. And inevitably, they branch out on their own. They decide to go freelance, and they start their own business. A lot of them come to me at some point and they're like, okay, I'm losing control of keeping track of all of the expenses and income and everything like that. Can you help me? And the great thing about what we do and what I've structured at my company is that we're able to scale up or down based upon a client. So a client comes to me and they're just starting off. They have absolutely, a very little budget for bookkeeping services. And what we typically do for some of those clients is that we help them literally just download their transactions into QuickBooks on a quarterly basis. We minimize our time of doing that, and we help them keep track of their income and expenses so that come tax time, everything is easier. And then inevitably, that freelancer then hires an assistant, and then we have payroll issues. And then they get even bigger, and then they're like, well, you know what, I don't have time anymore to pay my own bills and do all these other things. Can you help me with that as well? So literally, it is a concierge business in a way that they come to us and they ask, what can you help us do? And we typically help them do it. So again, from tax prep, consulting, payroll services, kind of you name it, we can do it. So yeah, let's get started today. As a thank you for joining the webinar today, I wanted to point out that I've uploaded some key PDFs that I think you guys would really find helpful at www.wallsfinancial.com/NAPW. They include helpful tax dates, some common business deductions, and an estimated tax payment worksheet that comes in fairly handy for some people. So let's see, let's get started here. So the first question is, what is a 1099er? Basically, a 1099er is someone like yourself who's paid, a 1099 actually, a 1099 miscellaneous is just an IRS tax form that you get paid if you are freelance or an independent contractor. And an independent contractor is just a fancy word for somebody who is self-employed. It also means that you are the one that's responsible for paying your own taxes. So I'm assuming most of you have worked for another company before and you got paid on a W-2. The difference between being on a W-2 and freelance or 1099er is that you're responsible for doing that. As a W-2, your employer would collect your taxes and remit them to the appropriate government agency. You're responsible for that if you're a 1099er. Also, as an employee, one of the biggest differences, as an employee, you paid 1/2 of your Social Security and Medicare taxes, which amount to 7.65%, and your employer would pay 1/2 of that, and you would pay the other half. Well, as a 1099er, you're responsible for 100% of that, so that's 15.3%. So that's also known as the self-employment tax, and that's sometimes why a lot of self-employed people, sort of feel the hit of being self-employed, and you just have to budget within what it is that you're doing and adjust your hourly rate to compensate for things like that. One of the common questions that I get is, if I don't get a 1099 at the end of the year, do I have to report that income for that particular job or that project that you were working on? As a U.S. citizen, you are required to report worldwide income, no matter what source. And an interesting, for example, is that a lot of times they get drug dealers on tax evasion. So even if you were a drug dealer, the IRS would expect you to file a tax return and report that income and pay taxes on that. So, it is true what they say. Death and taxes are the two obvious things in life, even if you're a drug dealer. One other thing to keep in mind when it comes to an assistant, a lot of people hire assistants to help them. Inevitably, they taking on your first employee is usually one of the scariest and one of the biggest hurdles you go through whenever you're just starting off. So a lot of people hire somebody to help them as an assistant on 1099 as well. If you pay anybody more than $600 in a calendar year, you are required to file 1099s on their behalf. And one thing to keep in mind, this changed in 2016, is that they moved up the deadline for you to file those 1099s. The deadline for doing so is January 31st now. It was, I think, in March before. So we get a lot of clients I see a lot of clients who come in February, March, April, and then even if they go on extension later in the year, just over the summer months, and they've never filed their 1099s. There's a huge penalty. Basically, they penalize you for each individual one if you do not submit 1099s on other people's behalf. It's also, just to keep in mind, if you've got other freelancers that are working with you, if you don't generate those 1099s for them, chances are they might not pick those up on their tax return, and that's going to create an issue for them. So just keep that in mind. The other thing with that that we always tell our clients, and the clients that we help with bookkeeping on the bookkeeping side, if you're hiring a freelancer, you have to get them to fill out a W-9. And I've also uploaded that to the NAPW, to the website /NAPW, an example of a W-9. My recommendation to you is to always get those W-9s completed before you pay them. I get a lot of clients who like to pay their assistants and whatever else, and then towards the end of the year or in January, we start reaching out to all these people and asking them for their W-9, asking them to fill out their W-9s. And surprisingly enough, they all go very silent because they know what you're asking them for. So I always recommend that you hold back a check until you actually get them to fill out their W-9. And I was listening to my friend Suzanne Brown's discussion yesterday, and somebody had asked the question about interns. I thought it would be just helpful to mention here. Hiring interns is not the same way that it was back in the day, or back when I did it as well, that it was just part of the education process and it was unpaid. I think it was Condé Nast a few years ago. They had summer interns, and the summer interns got together and they had a class action lawsuit, I believe, against Condé Nast. And basically, you either have to give them some sort of payment or school credit or something. You can't just be free labor for the most part. So I'm not an expert in hiring interns, but you should definitely explore that option or do some research before doing so, because there has to be a benefit there for them. Also, on in the slides or the PDFs that I uploaded to my website are some important tax dates. Again, the January 31st date for when 1099s are due. April 15th is obviously the big date for whenever your individual tax returns are due. But if you also go on extension, you can get a 6-month extension until October. So there's that. There's also your estimated tax payment dates. So April 15th, June 15th, September 15th, and January 15th of the following year. Again, check out the PDF that I gave you. I gave all the dates relating to 2018. Next topic, expense management. One of the first things, once I have a client that comes in and decides that they want to go freelance or open their own business, I always recommend that they open a separate bank account for the business. The simplest thing is to open a separate account, get a debit card for that account. That way then you're able to purchase things or get a separate credit card for the business account. But do not commingle your personal expenses and your business expenses. It's a disaster in a way. And the biggest thing the reason that I say that is that if you were to get audited by the IRS and they questioned your Schedule C or your self-employment income, by keeping it isolated, you wouldn't have them going through your personal bank statements and your personal accounts and looking through, scrutinizing every single transaction. If you're able to isolate that, I highly recommend that. And the other note about that is that it doesn't actually have to be an official business bank account with your bank. Banks sometimes charge a higher monthly rate or a fee for a business account. Just starting off, it doesn't have to be a separate business bank account. It could just literally be another personal account of yours that you use specifically for the business. And the same thing goes with the credit card. You don't have to open a business credit card in order to do it. If you already have a business credit card that you can use and just use for business, then by all means go for that. Then whenever it comes to your receipts, a lot of people ask me, speaking of the credit card statements and the bank statements, a lot of people, it comes up all the time, well, just because I charge it on my credit card or I use my debit card, I don't have to keep my receipt, correct? Well, that's not the case. If you get audited, the government is going to expect to see those receipts. Now, some of the receipts, obviously, I live in New York City, so taxi cabs, for example, are fairly obvious on your credit card statement or bank statement, but other things are not. And I always give my clients the example of, say, a Home Depot purchase. So you go to Home Depot and you spend $1,000 and you put it on your Business American Express card, and you throw the receipt out. You tell your bookkeeper, you tell whatever, you categorize it in your software as a business expense, and so be it. Let's say then you get audited by the IRS. The IRS says, okay, so what did you spend it at? What did you spend $1,000 on, for example, at Home Depot? Well, you could have legitimately spent $1,000 on business expenses. You could have, purchased cabinets that you used in your office or kind of a thing. But the flip side is that you actually could have spent $1,000 and renovated your kitchen. So without those receipts actually in hand, especially for big purchases, you really, really, really need to keep those. As that's just very, very vital. And when it comes to receipts, I typically recommend that my clients keep them organized in some sort of an envelope system, whether that is sort of January, February, March, through the months, or if you categorize them based on category. So cab receipts, dinner receipts, et cetera, things like that. And also keep cash receipts separate from the ones that are used by your credit card or debit card, because you're going to want to add that in separately. If you're looking at your bank statements, you're not going to see your cash receipts, obviously, on things like that. So you need to break up the cash receipts from the other ones. Then I always recommend clients on a regular basis. It can almost be like an arts and craft day. I recommend that they take all those receipts on a regular basis, monthly or quarterly or however, whenever they get too crazy. Take all those receipts, tape them down to a piece of paper, sum up. Say you're taking all your cab receipts for the day. You take all your cab receipts, lay them out on a piece of paper, tape them down, sum up the total of that page, and write the total down in the corner. And then you can actually scan and shred the originals. This is a very good practice in that you then have little chance of losing the receipts once you've scanned them and gotten rid of them. And like with the thermal paper and things like that, you avoid the risk of the receipt actually disappearing over time. So if you could do that, tape those down and then scan those to your computer or to the cloud or wherever you want to keep those things, that is at least is safe for quite a while and a good thing to do. The other thing that I just wanted to point out in categorizing expenses, this came up just recently. If you're categorizing your expenses within whatever software you're using, you don't put your payments to then the credit card within those expenses. That would actually be double dipping. So I had to explain that to a client recently that, they ran charges on their American Express card, and then they put the actual payment to the American Express card on the list of expenses, and we had to pull those out inevitably. But just thought I would point that out. Next kind of topic, payment processing. Back in the day, to process credit cards and things like that, you used to have to enter into merchant accounts and have those big, bulky credit card machines and whatever. But now, sort of everybody nowadays can process a credit card with their smartphone. Two recommendations about that. Number one, you need to compare rates before you do this. I see this a lot. Almost inevitably, then the first thing that people want to do, aside from opening up a business bank account, is opening up a credit card processing account. Generally rates are around 3%, but you need to do a little research before you sign up for it. The second really big thing before jumping into this is that I think that you really need to look at how your credit card processing and how you're going to do that part of your business plays into the scheme of your business, almost like a business plan in a way of how you're going to process this, or a roadmap. I see a lot of people, like I said, they open up a bank account and they immediately go out and sign up for Square. Nothing against Square, I think it's a great company, but and they've done an amazing job marketing what it is that they do, but their fees are extremely high based on that marketing. So there might be other options out there. I always recommend my clients, if you're going to process credit cards, I'm a huge fan of QuickBooks, and I'll talk about that later in the game here. But, Intuit, the owner of QuickBooks, is a huge company, and so they process thousands and millions and millions and millions of dollars of transactions a year. Instead of just jumping out and going with Square or something like that, I think you just need to look at all your options before you commit to that. The other issue that I have with all of these apps and all these different things that you can do is that I find a lot of clients sign up for this and they just get lost at some point. I recently had a client in my office, and I said to her, I was like, where do we find the income for the year? And she kind of looked at me perplexed, and she goes, well, let's see. From January through May, I was using Square, and then I switched over to PayPal, and then I started taking Venmo, and some of those payments ended up in my personal bank account, and blah, blah, blah. You need to keep it streamlined. And the biggest issue that I have from a tax perspective is that the IRS has 3 years to look at you. So in the case of my client that I was referencing just a moment ago, if you have a hard time remembering what you were doing 2 or 3 months ago, imagine how it's going to be 3 years down the road. You just really need to think about this before you just run out and sign up for an app. Apps are meant to help you and to make your life easier, but having too many of them can definitely become an issue. Another thing to keep in mind, I actually had recently a tax client who was a hairstylist. He, of course, went out again and opened up the Square account because he said that everybody that was going to get their hair done needed to pay with a credit card. Well, what we found out later on was that he then bought software to help for scheduling his appointments. And inevitably, in the software that he bought, there was also a merchant capability within it, a merchant account capability. So he could have kept everything all in one place. He could have had his calendar in one place, processed the credit cards, kept almost a database within the same software versus keeping all of these things. So that's just my point, is that you got to think about how it is that you're going to process these things and how everything plays into the scheme of what it is that you're doing before just doing it. And really think about this and research it before jumping in and signing up for things. The next topic that I always get asked is, what is deductible? Well, honestly, as a self-employed person, almost anything can be a business deduction. And I say that with a small caveat. As a tax preparer, I tell my clients, I can put anything in that tax return that you want. The issue is that at the end of that, whenever we're finished, you sign at the bottom attesting to that the information is correct and accurate. So again, the IRS has 3 years to look at you. So we can put anything in that tax return that you think is a business expense, but unless you're able to justify it and back it up, you might want to think twice about that. So again, on my website, on the www.wellsfinancial.com/NAPW, I gave a list of common business deductions. Can go as easy as cell phone expenses, repairs, computers, things like that you're buying for the business definitely are expenses, and you should definitely utilize all of that. That's one of the advantages sort of being self-employed, is that you're able to write a lot of things off. But again, you have to be able to justify it, and you have to keep your receipts in order to honestly protect yourself. Let's see. And again, I get the question a lot. Is this deductible? Is that deductible? Such and such. What I recommend to clients, I have a lot of clients who keep track of their expenses in Excel. For example, if they don't use other software, they use Excel. I always tell my clients, if ever in doubt, or if you think that something might be a deduction, but you're not really sure, instead of piecemealing this and going through every single question throughout the year, put them all in a category. put them in a column in Excel as, ask my client or ask my accountant or talk to me at tax season. If you're using software, if you're using QuickBooks or some other piece of software, one of the standard categories is ask my accountant. Don't stress about whether it's going to be deductible or not right then. You have a lot going on, or starting a new business. I mean, there's a lot going on with that. So don't get bogged down with the small details. Again, if it's something that you're not sure about, then just categorize it as ask client and kind of move on, and we'll discuss it at a later date. Then the next topic that I always get asked is estimated tax or taxes and estimated tax payments. How do I calculate them? What do I do? That's a big topic. If you're just starting off a new business in 2017 or within the first year kind of a thing, chances are fairly slim that you're going to have to make estimated tax payments unless you're really doing very, very well. So the only time that you're going to be making estimated tax payments is if you actually are turning a profit. And a lot of small businesses in year 1 or year 2, you're not profitable yet. So you don't have to really worry about doing the estimated tax payment thing until then. I work with a lot of creative people. So I've tried on my website as well to give you a estimated tax payment calculator for you to download and for you to play with and to see how your estimated tax payments work out. Without getting too technical and too complicated, in order to avoid penalties and interest with the IRS, you have to satisfy what are known as the safe harbor rules, which means that you have to pay 110% of your prior year liability, or 90% of what you expect that you owe for the current year. So let's say this year, say 2017 is, you started in January, you started your own business in 2017. 2016, you were an employee somewhere. So year 1 for you is going to be a little bit different because in the worksheet, I tell you to look at your 1040 and you look at the taxes that you paid last year. So let's say you paid $20,000 to the IRS last year. The simplest thing to do is to take that $20,000, divide it by 4 into 4 quarters, and each quarter you would pay the IRS $5,000. That's the easiest thing. That's the easiest way to avoid any penalties or interest with the IRS. But January, you started your own business. You don't have the same amount of income that you did in 2016. So you don't necessarily have to pay that $5,000 per quarter. In that situation, I always recommend my clients just put anywhere between 20 to 30% of their earnings aside for estimated tax payments. I always recommend them also to do an online sort of savings account in order to put their estimated tax payments in, because otherwise I've got tons of clients who like to spend, or if it's too accessible to their bank account, they end up spending the money. We usually recommend American Express has a really good online platform on the bank side that you can create an online bank account, or Immigrant Direct, or Goldman Sachs has an online savings account. Anything, you can do anything like that and just link it to your business account. And anytime that you get payments, transfer anywhere between 20 to 30% of the gross to that account. My experience has always been that 25% is usually the sweet spot, but it all depends on how many expenses you have, how much income we're talking about, and things like that. But generally, 25% is usually the good number. So if funds are tight, you can shoot for 20%. If you want to go a little bit higher and potentially put money aside, be able to budget for a retirement contribution, then I would shoot for the 30%. But basically, you would take that amount, and then every quarter you would pay in what you think that you would owe in that situation. So if you're, a year 1 business, I would suggest taking the worksheet and doing option 1 and option 2, and then looking at it and making a decision. Another thing to think about whenever a new business has to do with cash flow. So I get a lot of clients that are like, oh my God, I'm not going to be able to make these estimated tax payments because I've got cash flow issues. And that's completely fine. A lot of clients, they'd be willing to pay whatever penalties and interest. It's not a big amount, especially if you're just starting out. They would rather pay the interest on not paying in the estimated tax payments and being able to have control of their money than they would turning that over to the IRS at that point. There's a serious cash flow issue when you're a new business. So maybe budgeting in some penalties and interest is part of what it is that you do. But yeah, you don't necessarily have to do that. But again, estimated tax payments are something that definitely inevitably come up with everybody, and it's a stressful situation. So again, I tried with this worksheet to make it somewhat easy as a guide. You definitely want to talk to your tax preparer about this as well, just to confirm it. But I just thought it would be helpful to have something like this to work through. And then finally, one of the other topics that I wanted to talk about today is software. And I cannot stress this enough. Starting a new business, you're kind of doing yourself a disservice if you don't use some sort of software in the beginning. Again, I told you earlier, a lot of my clients try to keep track of their receipts in Excel and things like that because they get a little bit intimidated by these software companies or the software products out there. But really, truly, you really need to do a little bit of research. The simplest on the chart here is Quicken. Quicken is an amazing product. I've been using it personally for 20-something years. They have a business version, and it's $99. They also have a version for Mac that's $75. So, when you're talking about business expenses, something like this is something that I would highly recommend that you do for a couple of reasons. Number one, you link Quicken to your bank account and your credit card companies, and you download those transactions on a regular basis, and you categorize everything. You're then able, throughout the year, during a month, when you're doing your estimated tax payments, you simply have to go in and run a report and see where you are for that quarter. Where are you? Are you profitable? Are you not profitable? And it really, really helps versus the Excel approach where you don't really know. In the first year, that's great. The other advantage is that by, say you're in year 3 or year 4, it's always very helpful to run reports and be able to look back and compare how was I doing this year to prior years. And so again, I think software is amazing. If you want to take a step up from Quicken, there's QuickBooks. I'm sure everybody's probably heard of QuickBooks, the desktop version. It's a little more expensive. I think you're probably talking about $200 to buy QuickBooks. But again, as I mentioned earlier in the presentation, one of the advantages that I have of using QuickBooks is that I can create a merchant account on QuickBooks, and I can send out my invoice I can email an invoice to my customers, and at the bottom of the invoice, it has a link. So literally my clients get an invoice, they can click on the payment piece, and they can pay my invoice right then and there. And the payment comes into your account ACH 2 to 3 days later, and it's just super, super easy. People are doing less and less by mail, and so literally to be able to do this, to be able to send out an invoice electronically and to get paid faster, because like I said, cash flow is a major issue for self-employed people. I love QuickBooks for that. And the fee for somebody to pay you, it used to only be 50 cents, which was like a no-brainer for me because by the time that you would mail out the invoice to the person, it was almost the cost of a stamp. But they've recently raised it to $1. But even at $1, to be able to get paid, in a couple of days versus them, or saying that the check is in the mail or whatever else like that, I think it's a huge advantage. The third option on the list here is QuickBooks Online. QuickBooks is really talk about marketing. They're really marketing this product, the QuickBooks Online product. Don't get confused. QuickBooks Online is not the same product as QuickBooks Desktop. They are radically different, and from the bookkeeping perspective, they are literally two different products. But QuickBooks Online, nevertheless, is a very good product, and there are advantages to QuickBooks Online. If you have partners or you have other issues going on like that you need transparency, or people need to be entering invoices from multiple locations and things like that, QuickBooks Online might be a good option for you. But with that said, they have a whole bunch of different products, a whole bunch of different versions of QuickBooks Online. We usually recommend QuickBooks Essential to our clients, and it runs about $35 a month. The one I do not recommend to clients is they have one called Self-Employed. And basically what they try to do in the Self-Employed version is help you with your estimated tax payments. And so they really limit it as to what you can do. You can't create your own categories. You can't, you're very, very limited as to what you can do, because they want to be able to try to, isolate what it is that you're doing and calculate your estimated tax payment for you within the program. The other disadvantage to the QuickBooks Online Self-Employed is that you cannot reconcile your bank statements. And again, if you're unfamiliar with that, you should become very familiar with it. If you're not reconciling your bank statements or your credit card statements, chances are your information might not actually be accurate. So when you reconcile QuickBooks to your bank statement, for example, you're truing up and you're making sure that what is in your program is actually what is in on your bank statements. And so again, this is where, when I had mentioned earlier about the client who was, running his American Express expenses through on his thing, but also categorizing that American Express payment to the American Express card as an expense as well. If you reconcile, that will capture all those kind of things. So definitely look at something like that. As far as other software that you can go with, there are other software companies out there. There are other options other than QuickBooks or QuickBooks Online or Quicken. But I always give the example to that. When I was a kid, I asked my parents for a computer, and they bought me a Texas Instrument versus an Apple. Well, I don't know where Texas Instrument is today, but Apple is definitely still a thriving company, and QuickBooks is by far the biggest probably company for software regarding bookkeeping and things like that. But again, there are other options out there, and I'm sure they're fine and good. I haven't used them all that much, but they are out there. Wanted to touch on another couple of software apps and/or software that's out there. My assistant wanted me to touch on Neat, which is an app for managing your receipts. And there's a version of Neat that is the light version of the software that's $80 a year. It allows you to take pictures of your receipts and helps with management of things like that. There's also Shoeboxed that will help keep track of your receipts. It's a little more expensive, but it also adds in the option of being able it uses GPS to track your business mileage. So if you have to get reimbursed by your client for travel time or things like that, it does that. And as well, regarding the receipt management, QuickBooks Online will allow you to take pictures of the receipts on your phone and attach those to your categories in QuickBooks Online. And as well, you can also do the same thing with QuickBooks Desktop and Quicken. So again, going back to this whole thing of, you can get another app, you can get Neat, or you can get Shoebox to do that. But if you go with something like QuickBooks, it's kind of already built in, and so it's kind of one-stop shop as far as that goes. And one other piece of software that I really, really, really highly recommend if you have employees is a piece of software called T-Sheets. I just came upon T-Sheets within the last year, and I am a huge fan. And if you are in California or in New York, labor laws are extremely, extremely difficult. In California, not only with overtime do you get overtime at time and a half, but if they work a certain number of hours, they can get double overtime. And so T-Sheets is just absolutely phenomenal that you can set up all these different rules as to how to track the time, the employee's time. There's an app on their phone as well that they can clock in and clock out. You can add the GPS feature on the phone, so you can actually see where they're logging in and out if that's an issue of where they are clocking in and out of. But it's a really, really cool piece of software, and it also integrates with QuickBooks, so it could make your payroll process or processing of payroll super, super, super easy. I mean, I recently started with a client who literally had the old style, time clock where they were punching in and punching out, and it was just an absolute disaster. And we moved everybody over to T-Sheets, and it really kind of simplified things. So, again, if you have employees, it's great, and it tracks your PTO time. They can submit requests for vacation time and things like that on T-Sheets, and you get notified. It's just a really, really incredible piece of software. It does the time tracking better than QuickBooks or anything else that I've really looked at. So yeah, those are the main points of what I wanted to talk about today. And one other thing that I wanted to bring up to everybody on my website, if you sign up for the email list that we do, I'm working on a product called Financial Bootcamp. And what it's actually going to be is hopefully when it's up and launched, it's going to be a boot camp for self-employed people and boot camp for individuals. And since we're talking about the self-employed person, self-employed boot camp would entail basically walking you through and helping you do estimated tax payments. And there will be modules on estimated tax payments and budgeting and reading financial statements and how to project things. And it's basically helping or transferring a lot of my knowledge of what I deal with on my clients on a day-to-day basis to a much wider group. So I'm hoping to have that up and launched fairly soon. So keep checking out my website for that. And if you sign up for the mailing list, we will email out when it's launched. So yeah, I think that's all I have today, Russ. Typically with tax question or tax topics, there's usually 100 different questions. So I'll put it back to you. And
thanks, Brian. We do indeed. We have questions. And just firstly, before I go on, obviously there's a huge amount of information that you gave there, Brian. Absolutely amazing. But a couple of people have got in contact to say they can't access the PDFs on the link. I just wanted to confirm for everybody that if you visit Brian's website, which is walsfinancial.com/NAPW, and that's lowercase NAPW, you'll be able to get amazing information that Brian's put together for you.
Yeah, and if they can't get it, I can also send that out as well to people if they don't have that information.
Thanks, Brian. Now, an awful lot of information you got through then. We do indeed have questions that have come in, and we've got time, I think, hopefully to answer a few of those. So I'm just looking through here. Now, this is an interesting one. And let's see. What is the penalty for not filing a 1099?
Well, in year one, you can usually, if you forget to do them, you can usually write them a letter and get an abatement on year one for doing it. But I believe it's anywhere from $35-ish to $50 per 1099 that you do not file. They've gotten really, really aggressive about doing this, and the reason behind that they've got aggressive about it is if you don't generate a 1099 for somebody, the IRS doesn't really know that you've paid anybody. The person on the other side, again, they don't feel like if you don't send them something, they don't feel they have to report it, and the IRS is missing out on revenue. So they've really clamped down on that. And even on your Schedule C, there's a box. There are two questions on your Schedule C that are asked. And the first one is, did you pay anybody more than $600 that would require you to generate 1099s for them? And you have to answer yes or no. And then the follow-up question is, okay, if you were required to do them, did you in fact do them? So I'm assuming that if you answer yes, that you paid somebody more than $600, and then you said no, you did not do them, I'm sure you'll probably get some sort of a nice letter from the IRS asking as to why you didn't, and they will do some investigating. So the penalties can be kind of severe. If you're only talking one or two people, it's not a big deal, but again, you just really you need to be compliant with that.
Fantastic, Brian. And interestingly, we have a question there from one of the audience who said, I'm an independent contractor. What do I do if I received miscellaneous income, but I didn't receive a 1099 form from the payer?
Again, you are required to put that income into your tax return. Yeah, I mean, if you say if you gross, say, $100,000 a year of your freelance income, but you only receive 1099s totaling up $50,000, you still have to add that extra $50,000 into the tax return of income that you didn't get the 1099s for. And if you do get audited by the IRS, one of the first things that they're going to ask you for are your bank statements, and they will literally add up all the deposits for the year, and that number should tie exactly to what is on your Schedule C as your income. So, yeah, you have to include that income.
Thank you. Good advice. Now, here's a couple of questions. This is touching on the same type of topic. So we've got one here from one of the audience saying, how do we address, let's say, Canadian contractors, freelancers who do not have ITIN or SSN, have heard about a tax treaty between US and Canada, and on a similar vein, do I need to file a 1099 if I hire a non-US citizen?
That's always a good question. There is no. That's a very tricky question because I mean you have to really you have to find out how that person is working in the United States. So you have to get into the questions of what kind of a visa are they on, and are they legitimately able to work in the United States, and do they have a tax ID number? They don't have to have a Social Security number. They can have an ITIN, but they literally also have to be legal to work in the United States. So it's kind of, by hiring somebody from Canada or outside the United States, there is a little bit more work that you have to do, and I would highly recommend talking to your tax professional about that before doing so, because you do want to be compliant. If you're working with a company outside the United States, it's a little bit different. I mean, you can work with anybody like that. I had a question from another client of mine just recently that she was doing a job internationally. She was pitching something internationally, and she was collaborating with other companies outside the United States, and she was having to pay them a commission outside the United States, and it had the same similar question. So from a business perspective, if you're working with other companies, you're not going to generate a 1099 to a foreign company because number one, the company is outside the United States. They don't do anything with that information. Similar thing, if you work with somebody, if you do a job for a client outside the United States, they're not going to send you a 1099 either. So you also have to report, if you have foreign income, you also have to report that into your gross numbers as well, the same way that you would. But it's much harder for them to track and things like that. But yeah, hiring somebody outside the United States, you have to. There's a whole. Depends on what country. There are treaties and whether what has to be done. So that one's a little more tricky. You need to talk to somebody a little more professional before hiring them and bring them on.
Thanks, Brian. All right, another few here. We've got time for another couple of questions. Now, this is from somebody who says they don't earn a huge amount of income through their service business. Do they need to charge sales tax?
Again, that depends. What I always recommend people to do, I live in New York. New York is obviously, if you were to call New York State, for example, New York State, the Department of Finance has a separate sales tax division. I highly recommend people to just call the sales tax division and tell them your situation and ask them if you need to be collecting sales tax. I mean, for example, I don't need to, collect sales tax on tax preparation fees, but there are all kinds of other others. Every situation is different, and really the only way to know is to call them and make sure.
Right, that makes a lot of sense. Thank you. Right, so time for another couple. Oh, here's an interesting one. This is somebody asking if they have to pay tax on money given as a gift. Is that income, or do they have to pay tax on that?
If you are receiving the gift or giving the gift, if you are the recipient of a gift, there's no tax implications on that. So if somebody dies and you receive an inheritance, it's free and clear to you. What happens on that front is if somebody else gives you a gift, there are all kinds of, not to get too technical, but there are exclusions every single year. You can gift anybody that you want up to $14,000 or $15,000 a year, tax-free. So you can write anybody a check for anything up to $15,000, $14,000 or $15,000, and not have any tax implications. When you go over that amount, then the person should technically be doing a gift tax return, which is a whole other, completely different topic that we could talk about for hours. But the paying basically, but yeah, if you give money as a gift, if it's below that threshold, it's not an issue, and if you receive any sort of a gift, it's tax-free.
Excellent. Thanks for clarifying. Right, look, time for, let's see, two last questions, I think. Here's somebody that they work from home. I think this is to do with mixed residential and commercial. So they work from home. Can they claim their home office as a legitimate expense?
Absolutely. And on the slides, that's one of the things. It depends on how much if you work from home and you have a home office, it has to be used exclusively for the business purposes. So here in New York City, that's a little bit difficult based on our size restrictions. But if you devote like one bedroom of your house or your apartment to the business, then you would basically take the overall size. Your tax preparer will ask you, the overall square footage of your house or home, and then how much of that is used exclusively for business purposes. Usually the number is about 20 to 30%. 30 is a little high, but 20 is usually about average. So then you would take 20% of your rent, 20% of any your gas and electric, things like that. You would just take a fraction of whatever overall percentage of the overall space the home office is of the overall space.
Thanks, Brian. So last question here. Let's have a little look. This is from somebody. They didn't receive a 1099-R form for the last taxable year. Should they have?
Potentially, yes. The issue, again, is if people forgot or people, especially small businesses, if they didn't know they had to do this, a lot of people don't do it. So no, it doesn't mean that you had to do it, or that there was something wrong if you didn't receive one. But I do, a lot of my clients, I recommend them to keep track of who they receive money from all year long. And then basically when it's time to start receiving those 1099s, to basically check off all those people that they've actually received the 1099s from. And then you can follow up on the people that you didn't check off and reach out to them and say, hey, am I getting a 1099 this year? Typically they'll say no, or you were below the $600 limit. We didn't have to generate one for you. And then at least you know that you're getting one or not. But inevitably a lot of people don't keep track of this throughout the year. And then they file their tax return. And what I see is we file the tax return, and 2 days after we file the tax return, one of those come in the mail, and they're like, oh, I forgot to include this. And, of course, they inevitably didn't include the income in their tax return. So then you have to amend their tax return, and they owe money on the additional amount. So, again, I can't stress enough keeping organized, and that's why I think software is amazing, because it would help you keep track of your income for the year, and then you could run a report at the end of the year and see, whatever your gross income is, and like I said, start checking off the 1099s from that and see what's left that you did not receive your 1099s from. So to answer your question, no, it's not necessarily there's not something wrong or it wasn't a problem. The person on the other side, you might have been below the limit of $600. They might not have known they were supposed to generate it. There's a whole slew of issues as to why they might not have generated it, but they are cracking down because, like I said, people typically don't pay or don't report that income if they don't get a 1099. So that is their motivation for cracking down on it.
Excellent. So that software does make a difference in managing things, Brian. And on that note, actually, just as we close, a couple of people have asked, could you spell the name of the software for receipt management that your colleague asked you to recommend?
Sure. It's Neat, N-E-A-T. And then the other one is Shoeboxed, S-H-O-E-B-O-X-E-D. I haven't worked with them, but supposedly there are apps and whatever in the App Store that you can download. So Neat, N-E-A-T, and Shoeboxed, S-H-O-E-B-O-X-E-D, as in a shoebox.
Thank you very much indeed, Brian. And I know that we're continuing to get questions in there. Thank you, everybody who's answered questions. I'm afraid we're coming to the end of the session now. Would like to thank you, Brian, for that excellent and timely advice. I know that everybody will be off getting themselves sorted out for the tax returns. So thank you for sharing all that knowledge today with us. Recordings of this session and all the others over the course of the virtual summit this week will be made available to view here again on the Bright Talk platform. It'll also be emailed to you. If you haven't already done so, please make sure that you register for and attend the remaining sessions taking place today, as well as watching the earlier sessions that we've run over the last 2 days on demand. Visit napw.com as well for details of the benefits that membership of the NAPW brings. So just down to me now to thank you again very much indeed, Brian, for this great session. Thank you to everybody for joining us this afternoon. I look forward very much to welcoming you to the last few sessions this afternoon and to future NAPW webinars. Thank you very much indeed.